Hey guys, how's it going? Hope you guys are all doing well. Here to talk today about a change that happened this past week with Ethereum. They quietly raised the gas per block from 12.5 million to 15 million. So they increased the supply per block by 20%. That's big. It's supply and demand. So supply goes up, then price should go down if demand stays the same. We're going to talk a little bit about what this is going to mean for miner profits. Will this have an effect on the block reward? So we'll talk a little bit about this and figure out which way we think it's going to go. So again, what does it mean for miner profits? So I'm going to give you a little bit of the TLDR first, basically telling you whether or not whether I believe the block reward will increase or decrease. We'll go over a little bit about the Ethereum transaction fees and how they are set up. We'll go over the economics, specifically price elasticity of demand and the determinants of elasticity, and then the participants and how they are affected, how they affect demand, and then what happened when the supply increased, and then a few final thoughts. So in short, we'll increase in gas, the amount of gas per block, increase mining profits. And the short answer is it depends, but right now it appears that it is going to lower miner profits. In other words, the block reward will be lower due to the increase in supply. Again, supply and demand curves are different for different markets, so we'll go over a little bit of the reasons why that is the case. But in the short term, whales will lower their bid price for gas. Their demand isn't going to change based on this small little change for them. If you keep the same demand, but you increase supply, then that is going to lower the price significantly. So that's what I believe is going to happen. That is what happened in those 24 hours, or at least what it appears happened in those 24 hours during the time that they made this increase. In the long term, though, this could bring in new entrants into the market with the lower gas prices. We could see an increase in demand and then an increase in fees. But the question is, when would that happen? Would it happen before EIP 1559, where it could make a difference, or not? So we'll have to kind of wait and see if we see some nice spikes in demand based upon this change, with this increase in supply. Let's go over a little bit about how the Ethereum transaction fees work. Each transaction type has a set price in gas, and really a set amount in gas. The block originally had 12.5 million gas, and then it's been increased to 15 million gas, so a 20% increase. What can change is the price of gas is what can change. Let's take an example here. To get from point A to point B, let's say Chicago to Huntsville. From point A to point B, I'm going to basically use the same amount of gas each time. That isn't going to change. I'm doing the same number of miles in the same vehicle. It's going to be the same. But the cost of the price of the gas can change. So depending on what time of year I go, what gas stations I pick, that can change. That's what we're talking about here. The price of gas is the price that can change. The supply is the amount of gas per block. The economics of this is we have changed the quantity, a set amount, 20%. But we need to know what that's going to do to the price. That's the tricky part. What do we think is going to happen to the price? Percent change in quantity divided by percent change in price is the definition of price elasticity of demand. So that's really the theory we're looking at here. In this case, the supply is fixed. We did change it from 12.5 million to 15 million, but those were it was 12.5 million for a very, very, very long time. So the 15 million is brand new. It's not a typical where the supply can change a lot. In this case, it's a fixed supply that has very determinate times where the supply can change or has changed. In the case we're looking at, the change in quantity divided by the change in price, or whatever that would be, if the absolute value of that result is greater than 1, then it's considered elastic, and then it would be a benefit. Unfortunately, in this situation, we're looking at an inelastic price elasticity. The reason for that is a number of things, but the main one is the income share. That's the one that kind of really looks at this very clearly. Narrowness of market, this is a narrow market, less elastic. Is it a necessity for those people that need to trade? Yeah, it's a necessity. They're not saying I'm not going to trade. Again, we're talking about the vast majority, which are the whales. They find this a necessity. Therefore, the pricing is less elastic. The income share for those whales out there, they don't really care that the price of gas is coming down. I mean, sure they don't mind, but it isn't changing their behavior based on the price of gas. Overall, the market's inelastic. Could possibly be elastic in the long term if more people come into the market. But again, the determinants is how is demand affected, and the demand right now is not going to be significantly affected by this change. It could in the longer term, just not in the short term. So let's talk a little bit about the participants. The whales, they really don't have any change to demand. Their cost of transactions was relatively low because they're transacting in very, very large amounts. So if the cost of gas is 0.1% to 0.05%, it doesn't change their behavior. Like I said, they'll enjoy the extra profit, but it isn't going to change their behavior and how often they trade. The smaller DeFi investors, on the other hand, would have an immediate increase in the fact that they could then feel more free to trade and to transact, given that we have lower transaction fees. The problem is that the whales are such a large portion of the market that when you look at the effects of price, the smaller DeFi investors are not going to have a great enough effect to increase the profits or increase the block reward through their transactions. What may increase transactions is if we bring in a large influx of smaller investors that have felt previously turned away by the high cost of the transactions. But this is going to happen over time. This isn't going to happen overnight. We could see maybe in 2 to 4 weeks, we could see a return to the higher transaction fees and the higher block rewards. In the meantime, I think we're going to see lower block rewards. Not significantly. We're talking 5 to 10% maybe. So it isn't anything to get freaked out about or anything, but it is something to know that it is going to have an effect. So let's look at what actually happened over the period of time that they increased the block rewards. So they increased the amount of gas. So they increased the amount of gas per block over a period of 24 hours. It had actually been previously increased 12.5 to 13 relatively quietly, but from 421 to 422 over a period of about 24 hours, actually 25.5 hours is what I saw. It went from 13 to 13.5, then went from 13.5 to 14.5, and then over a period of about 6 hours or so, it looked like it went from 14.5 to 15 gradually. The other ones were pretty much just steps. Over this period of time, the block rewards did change, and before the change, they were 4 to 4.5 ETH per block, and after the change, they were 3.8 to 4.2. So you can see that that would decrease about 5% or so is how much the block rewards had decreased. So again, not a huge amount, and there could be other effects on this. It may not have anything to do with the supply. There could have been other effects in the market that were causing that to change. And for example, when it went from 13 to 13.5, it went down to, during that period of time, it was about 3.6 to 4.4. So it went down significantly. When it went up to 14.5, from what I could see, it was about 4 to 5.8. Now, 5.8 was kind of an outlier, but you're looking at about where it was at 13, about 4 to 4.5. And then when it went to 15, it went down a little bit. So there's a lot of things that can have an effect, but the evidence does appear that there was a decrease in the block reward, therefore minor profits. But again, many factors can be in play that could affect this decrease in the block reward. So, final thoughts. One of the things that, as I was going through this, it's really hard to calculate a firm block time. Block time had been around 13 seconds. I'm curious with this increase in the amount of gas per block if it affected block time. I don't think it did, but obviously if it went from 13 to 14 seconds, well, that 20% increase in the gas per block would be offset by the increased time of the block. We'd really have to look over a long period of time, and I didn't have time to actually try to do that calculation of over a couple of days, what's the average block time. I expect it's about the same, otherwise why would they do this? But was a question I had as I was going through this. The other thing is in the articles I was reading, it was stating that the miners had the ability to increase the gas per block. And that came as quite a shock because in the whole conversation in 1559, they made it sound like they were the only ones that could increase the block size because a lot of people were suggesting to increase the block size. And they were saying, no, 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 we can't do that because it will decrease security. There were a lot of different factors that went into it. So that led me to believe that the Ethereum developers had the ability to basically state whether or not they wanted to increase the amount of gas per block. So I know that this came out because Vitalik stated that he wanted that the group wanted to, or felt like it was okay to increase the amount of gas per block due to efficiencies that had been incorporated into the Berlin hard fork. They made that suggestion, and then I think the miners ran with it. But I think there's a way that the devs could actually have counteracted that if they didn't want to see the increase. So I think this was hey, this is a good idea by everybody. So to say that the miners just made this decision on their own, I don't actually think is true. But anyway, just one of those questions is I'm curious as to who actually has the final decision on the actual amount of gas per block. And the other thing is, when were investors aware of the change? Or are a lot of them aware of the change? Because depending on when they are aware of it may change their bid prices. So like right now, this weekend, I mean, gas prices are incredibly low. Well, is that a result of the change and increase in supply, or just kind of because it's a weekend? So if the investors became aware of it, say, Friday, they went, oh, okay, well, I'm going to lower my normal bid, because they all have strategies on what bid size they need to get to. They're looking at the mempool. So it may take a little bit of time for the mempool to adjust. So anyway, point being is that when everybody knows what's going on, it could have an effect. So I'm kind of curious as to how everybody is aware. Next thing I was curious about was, will the decrease in gas prices incentivize new participants, and by how much? So obviously we bring new participants in, we have new demand, and that will drive gas prices higher. So if we can get gas prices back up to where they were, well, you have increased supply and you have increased gas. So if you have more gas at a higher price per block, that means higher block rewards. That was what a lot of people just made the assumption that was going to happen. I haven't seen that happen at all. And then the last thing is, when will these new participants arrive? Will it be 2 weeks? Will it be a month? Will it be 2 months? How quickly will there be new adopters ready to add additional demand? Bottom line, I think in the short term, we're going to see some lower block rewards because of this change. In a month, we might actually see higher block rewards as a result. And the one elephant in the room that I didn't put on here is, of course, the price of ETH can have a very big effect. So everything I'm talking about here is in how much ETH are you earning in the block rewards, not how many dollars, because this change could very well increase the value of ETH because of the increase in supply. It increases adoption of the use of Ethereum where people were looking elsewhere. 20% increase is nothing to sneeze at. Anyway, those are my thoughts. Please leave your comments and your thoughts in the comments below. If you like this kind of content, please hit like and subscribe, and I will see you guys soon. Thanks.